Hello and welcome back to Cryptocurrency Trading Masterclass by Wealthy Education. In this video, we'll take a look at Zcash. So you can see I have the weekly chart up as usual. And again, we will look for areas of support and resistance on the longer term charts. I'll clean these up as we go along. So 150, I would suspect, probably be about where that is. This is going to be, let's call this 300. And let's call this 500. And I assume that you by now recognize that as resistance. That has resistance and support. Support and resistance. Let's go ahead and make another one down here. There's obviously a certain amount of support in this area. I'll make this 50. And we'll take it from there. So, first thing that you need to pay attention to is what the trend is. And right now, the trend is going higher. It looks as if we are trying to complete this rounding bottom. It's basically just what it sounds like. It's just the market trying to pick back up after a significant breakdown. It's a long kind of grind, and tends to be a little bit more reliable if we do break out. So the first thing that you need to see on this chart is if we break this 150 level, that's going to be a big deal that we will then probably continue to go much higher. So let's go ahead and drill down to the daily chart. And you will notice multiple reactions to this level here, for example, the $50 level. And one of the things that I see is the head and shoulders pattern right here. So you can see that we did this. And so what's your measured move? Well, your measured move's from 75 to 50, so that's $25 on a breakdown below the neckline. And you did get $25 and then turned right back around, which I suspect, and I will add the Bollinger Bands. But yes, I was going to say, I suspect that we broke down, got below the Bollinger Band, formed this hammer. You put in a trade above that hammer, and then you continue to ride it out to the upside. Stop loss down here. Probably have a target right here, as that was previous support, should now be resistance. A couple different things that we can add here. So the first thing that I would think of is volume. And we have another one of these common breakouts above the Bollinger Band on volume. That typically means you're going to get a move higher. You can see that we broke above there and then broke back down below the 20 SMA. That might have been your signal to get out, depending on how aggressive you were or were not. This is another one of those sudden shots higher. Not really a squeeze, but definitely an expansion. Volume picks up. That's a good sign. This is basically dead for those who trade the Bollinger Band system. It's just crushing, and then eventually you do get this move here on higher volume. That should send you going to the upside. If you put stop loss on the other side of the Bollinger Bands, you got nowhere near running into trouble. And in fact, you even if you wrote it, not that you would, but even if you wrote it all the way down to here, you still never hit your stop loss, and then you took off to the upside. This is a very interesting setup because we had been going sideways. We definitely broke down, but notice how we fell, got a little bit underneath this Bollinger Band, the -2 standard deviations, and then we formed this massive shooting star that touched the 20 SMA, and then we broke back down. Pretty straightforward setup there. Risk to reward probably left a little bit to be desired. You put a stop loss on the other side of the candle, you short just underneath it. The only real reference you have at this point would be this low, maybe the $50 if you go on the psychological importance of $50. But, at that point in time, you probably didn't know that. But it does show a reasonable setup, other than you didn't really have a target on the bottom that you could name right away. So let's get rid of the Bollinger Band. And let's take a look at this on the hourly chart. So the thing about when you drill down in time frames like this, you get micro support and resistance. And what I mean by that is just like little areas that might not show up on the higher time frames, but certainly this has offered support. So if you were to break down below there, that obviously would mean something. Just as this has offered resistance. And this is just a simple breakout. Now notice how this shooting star suggests that we're going lower, but then we turn around and broke above it. Well, that's a pretty powerful signal. That is a failure to break down. So the sellers have been wiped out. You can see that you break the top of that candlestick. And then at that point, you can put a stop loss on the other side of it. Once you break it here, 2 candlesticks later, 2 hours later, you rally and you take off. This was resistance, becomes support. We break down through support. We go on, find a little bit of a hammer here at 90 and then bounce again. So there are all these little micro setups as well. It really comes down to the market that you are trading. Something like Zcash you can trade on the lower time frames. This I find interesting. Just by glancing at it, I saw this. And you'll begin to see these setups all the time once your eyes adjust to the markets. So we had a pretty big leg lower. We rallied, formed a shooting star right here at an area that had been resistance previously. And then, of course, the 50% Fibonacci retracement level. The bottom of the candlestick right here was tested. We didn't break through it, but if you were just aiming for a return, then you got it. So the Fibonacci setup there, pretty nice, really. So let's go ahead and put a couple exponential moving averages. We'll do 9 and 20. Nice fanning out and a crossover type trade. Nice angle to it, so that of course makes you interested. Crossover here, and then the angle starts to fan out. You didn't even have to get out until down here, so that was a nice setup. That being said, it looks like this market does tend to trend quite nicely when it does get moving. And quite frankly, that shouldn't be a surprise because you're dealing with larger numbers. So with that being the case, it's a little bit easier than like a Ripple to day trade. Let's go ahead and remove all of the indicators. Let's put the RSI on and see if we can spot any setups. Oh, so here we go. The Fibonacci trade, if you remember, I just showed this to you, and the 50%, that even is more present due to the fact that we have the RSI in overbought territory, so that's yet another reason to consider taking that trade. So that is very interesting. And you'll see that's that confluence that I had talked about previously, where you want to see confluence if you can find it, meaning that you want multiple reasons. So this is interesting. This was overbought, did pull back to fall in this area, and it found this area here, 75, that had been resistive. Notice how none of the rest of this was overbought, so certainly worth paying attention to. When you look at this chart, again, you can see that there are nice runs higher and lower, and the biggest problem that you run into with RSI is it's not the be-all, end-all. So, for example, this was overbought, but we ended up pulling back into the normal range to the previous resistance, which should now be support. So you need to pay attention to, is it overbought, and then does it have some room to run to the downside? And in this case, it didn't, so you probably would have stayed out of that particular trade. So in the next video, we'll take a look at Chainlink and see what kind of setups we can find there.